All right, everybody. Stocks by the numbers. Welcome back. And my apologies. I know, as you see, it's about a quarter after 4. Market's closed. I personally been feeling just a little under the weather the last day or two. So I'm sorry I'm coming to you late, but we did have a lot of action and some news come out of China, and we had some movements take place in a few of our domestic stocks here. So I just wanted to do a quick update. And we have Alcoa 39.28 up 3.25 points today, closing up 9%, still going a little bit after hours. And this is basically on news. Supposedly, these headlines are saying that U.S. equity indexes rose as China stimulus expectations boosted basic materials. Micron's results lifted other tech stocks. But basically, this is why, again, I always like, in my opinion, I like these metal stocks, I like these material stocks, because at the end of the day, you're still going to need them. And since 2020 took place, with all governments, well, for the most part, around the world kind of locking the countries down, and then we're dealing with the hyperinflation here domestically, and even some places overseas as well, what does that translate to? Right? That's why I personally was so bullish on companies like Alcoa, US Steel, Southern Copper, right? Even LPX, Lumber Company, right? All those stocks have been holding up very well, if not climbing even today, especially. So, as we see here, Alcoa just absolutely raging, and this stock, we were in a massive uptrend, as you see, for about 2 years, starting out right around the time of those lockdowns, as you see, March, April 2020, stock down here, $6, $7 and change, goes in this upward channel all the way up to almost $100 a share. And then it was channeling downward here. And I remember doing a video. Well, I may have spoken about it, I think maybe this circle back here, and maybe I did an update in here, and people were asking me, they were saying, oh, we looked at it at like, 44, now it's at like 36, what do you think I should do here? And in my opinion, again, this is why I say sometimes if you're able to hold for the long term, you have to deal with the short-term volatility to look for that long-term growth. And something like, again, our steel, our aluminum, copper, all of those, in my opinion, I knew were going to stay up or even continue to go higher over the years. So as you see, AA, yeah, technically it's not back to where it was up here in the 50s and 60s, but it's coming down and bouncing nicely. You can see I had this support trend line drew out here, and you can see it basically tapped it just a couple of times if we were to extend it. Kind of flash broke below it, then had a healthy bounce, came back below it again. Here, let me do this for you, because, right? So if we extend that out, you can see, look, the flash break, and then the massive rally all the way up to 35, and then it comes back to the fib to retest, breaks that trend line, and then boom, has just been exploding on the up and up, now up to almost $40 a share. So in my opinion, I actually do still like it, even though it just popped today. Market cap 10 billion, you're getting paid a small dividend, currently yielding about 1.1%. The earnings have been pretty consistent. We have a nice beat there, top and bottom. The revenue has been steady, and you can see we had a miss on the EPS. Then we beat on both. Another beat on the revenue, miss on EPS, beat on top and bottom. This was the last time we had a miss on both, and that was all the way back kind of the first half of 2023. So the company has been looking better since then with these earnings reports. It's been on the up and up. Look at the EPS now, climbing nicely. We're 2 for 4 over the last 4 quarters on the EPS beats. And the revenue, just look at how steady that is. 2.7, 2.65, 2.6, 2.65, 2.83. So now we're technically up above that 2.72 from this time last year. Company reported 2.83 last quarter. Next earnings coming up about 3 weeks. And you can see revenue estimates 2.948 billion. So might be a little difficult actually for them to hit that revenue number, so we could be dealing with a potential miss in my opinion. So we might rally here. You can see that the stock is making higher lows, and it looks like it wants to make higher highs, which means if it follows this trend here, we popped from 35 up to 45, and now if we're taking the next leg higher, we might get up to 47, 48. And then if these earnings miss, you're going to see potentially a big drop back down to the mid or even low 30s. So that could potentially be something to keep in mind. But even annually, we can see the company had a slight dip in revenue from high 12 billions down to the high 10 billions here from 22 to 23. But it looks like now if we're at 2.8 and we're going to post, 2.8 or 2.9 even, and just kind of get in the ballpark of that number, then we could potentially be close to breaking above that 12 billion revenue number for 2024 again. So that's why, in my opinion, I wouldn't count something like AA out. And I still like it. I still like it. Let's look at stock charts real quick, because I wanted to look at other stocks as well. You can see now, though, that the stock has been raging and chunking up. We had a big day today. We can see the RSI now at 69, right? So we may go a little bit higher. It may try to touch that 40 psychological breakpoint, little threshold, and then you might start to see the rejection and the sell-off as the RSI tops out. But, I mean, the MACD was on the up and up, crossed to the upside here as the stock started moving, and that just continued the acceleration. We had a little pullback here, testing the 200-day moving average, and then the stock just bounced nicely. So, again, in my opinion, I still like it. Obviously, if you're looking at the stock now, if you weren't watching it, I mean, it just went from, sub 30, 30, now it's almost at 40. So if you kind of want to sit and wait, totally understandable. But AA, this is why I said, in my opinion, I always liked it. I always liked it. Switching over to SCCO, look at that, same thing. Just on the up and up. This one, in my opinion, probably one of the better calls on the channel. I think here was when I originally looked at the stock, gave you guys the whole spiel again. Hyperinflation, there's potential turmoil happening overseas. This is a copper company. Chances are copper is going to go up in value. We're still going to need copper for everything. And in my opinion, I would be a buyer. That's basically what I said back here. Looks like the middle of 22. And you can see the stock bounced off of that $45 level and change that I was watching, rallied back up to that other key level of about 75 where we had our double top. Excuse me. Looks like I did an update right here at about like 78, probably patting myself on the back. Slight consolidation, and then we just kept pumping and pumping. Stock getting as high as 129. Currently sitting here today, 120.43. Closed up over 9 points, or roughly 8.25%. We have some slight splits happening here, but at the end of the day, again, like I say, the metals, the materials, look at this, coming in 13% above EPS expectations, beating on the revenue side, excuse me, beating on the revenue side by almost 10% here, coming over $250 million above those estimates. And the quarter before, again, very healthy, and then we come off a miss, but then before that, very healthy beat, and then we have another miss, but then we're beating for the most part, slight miss on the revenue side, but I'm sure you catch my drift. This is why, in my opinion, I like to look at these companies. And as I always said, even when I first made the channel, are they boring? Do they move kind of slow? Again, it was probably the China stimulus injection that triggered our materials and metals to have the pop. So I understand it might have been an outside catalyst here today on these 8-9% pops. But in general, right, this is one that just flew underneath the radar. A lot of people weren't talking about it. And then I remember when we were like here, approaching these highs of like 97, 101, then I started to see it online. And people were talking about how copper prices have risen, how copper stocks have been doing very well, and is it worth it for you now after this run to step in and take a position in one of these stocks? And usually, again, I say in my eyes, that's basically how they do it. Just like something with Rolls-Royce. They take it out of the spotlight. They make it seem like it's not worth owning. They slowly start to rise it and rebound it right underneath your nose, right under the radar. And then after it rallies 100%, 300%, and starts to get back to where it was, then that's when they open the floodgates for the media. And you start to see on things like Bloomberg News, CNBC, all of a sudden everyone's talking about copper, everyone's talking about Rolls-Royce. Oh, is it worth owning now? Should you throw it on your watch list? Yeah, Johnny come lately, right? You're way too late to bring this to our attention. So shout out to me here, pat on my back. Looked at SCCO originally on this channel at about 45, stock sitting now above 120. And even after these rallies, just like Alcoa, I will reiterate that in my opinion, I do still like metals, materials, because at the end of the day, we need them. We need them. And I know we always talk about technology, and that's mainly because a lot of the tech companies are kind of hyper growth stocks. They don't usually pay out dividends to shareholders, right? They reinvest into their foundries, their manufacturing, they reinvest into research and development, and they just keep going up and up and up and up, which of course is very good. But also, I like to say, in my opinion, this is why you need a little diversification. Because at any time, at the drop of a hat, all of a sudden, if the tech sector decides to correct or start selling off, you can still have a couple of other brand name stocks that are holding steady in your portfolio. And it could be anything. It doesn't have to be SCCO, but again, it could be a metal stock like this that's paying you a dividend. It could be something like a Verizon that has now been slowly and steadily climbing back up, hitting new highs. They still pay you a dividend to own it, right? Could be something like Philip Morris. Like I say, probably one of my favorite stocks out there, Philip Morris Tobacco Company, right? Defensive. Whether markets up, down, or sideways, whether the economy's good or bad, if you're a smoker or now they have like those Zyn pouches or whatever. If this is a habit you have and you're running to the store every day, every couple of days for a pack of smokes or a pack of dip or chew, whatever it is, something like that is going to remain stable and they pay you a dividend to own it, right? So this is why we talk about a little diversification here and there. But SCCO, really, really nice day here. Market cap, 94.6 billion, getting paid a dividend yielding about 2.1%. Now we're up to a PE of a touch over 32. Earnings side has been pretty solid, and they've come in well above EPS expectations 3 of the last 4 quarters. Very nice. Annual revenue, as you see, dipped down, but is kind of holding that right around that 10 billion mark. And even though they dipped below 10 billion here for 23, look at that profit margin, still 24.5%. Definitely nothing to sneeze at. And here on the quarterly side, we can see the last couple of quarters, revenue has really chunked up. We broke above that $3 billion milestone mark. Look at the net margin off of that $3 billion, over 30%. So this company really seems to be rocking and rolling right now. And we'll be sitting at maybe close to 6, which means we might post like 11 to 12 billion, which as you see could be well above that 2021 annual revenue number. So something like SCCO, believe it or not, may actually continue on the up and up. And if we strictly look at revenue to market cap comparison, yeah, the stock right now is trading like 7, 8 times annual revenue with a 32 PE. So after the pump today, we could potentially calm it down. But remember, it's the catalyst of the stimulus injection in China that's driving these pops. So it may be short-lived, but it might not be a day short-lived. You understand what I'm saying? So this flow, this momentum might actually continue for maybe the next week or so before the SCCOs, the Alcoas of the world, before they kind of top out and then decide to start selling off. But we can see that technically we are a little overextended, but SCCO has been steadily delivering. So that's why, even though it might be overvalued here in the numbers, if they keep it up here, 115, 120, 122, in my opinion, it does make sense. Debt here, 7 billion. Equity now up to 8.5 billion, over 8.5 billion. That's the highest it's been going back the last several quarters. Book value per share approaching $11. That's the highest it's been going back the last several quarters. Debt was a little above 7 billion, slowly trickling down. Now we're at 7 billion. But I want to look at fair value here in my eyes. Equity minus debt would be about 1.5 billion. Let's look at cash on hand. Almost 2 billion. So now we're up to about, 3.5 billion. And now if we look at last year, that's 10 billion, so that's about 13.5 billion, but they brought in about 2.5 billion, so now that, in my opinion, puts fair value at like 15.5, 16 billion, which would be, what's that, 5? No, now that's like 6. That's like almost 6 times quote-unquote fair value, which, again, could be viewed as slightly overextended, but because it's copper, and because of what's been happening, both here domestically with our monetary supply and overseas now with the Chinese stimulus, believe it or not, in my opinion, it may be viewed as even undervalued and still attractive to a lot of analysts and a lot of investors on Wall Street. So something like SCCO, you might actually see break up and break higher. You might see new highs here going to 130 plus soon. So SCCO, again, obviously, will it come back down here? I don't know. That might take a lot of time. So I understand if a lot of you are kind of upset that you missed the train here. But this is one that I've updated a bunch of times, just like AA. And like I always said personally, I like the metals, I like the materials, and if you can wait for a sell-off, they beat them up, they take them out of the spotlight, that's when you step in, scoop up a handful of shares, collect those dividends, and just kind of ride that rebound wave. But let's look at stock charts real quick on SCCO. I'm trying to do this quick because I want to look at a couple of stocks, but we can see, yeah, just like Alcoa now, the RSI basically kind of overextended, right? We had a similar move, had a nice healthy bounce off of this 200-day and 50-day here on the daily. We broke well above the top Bollinger Band. We now have the trumpeting of our Bollinger Bands, but the RSI is now up here at 74. So, might continue tomorrow here off of this momentum, but chances are it's probably going to stagnate and start to pull back here to the 1-teens after that RSI now got above that 70 level. MACD's just been on the up and up, but look at the tightening here of the moving averages, meeting up just at about $100 a share. So in my opinion, that would probably be your downside here possibly. If you step in here 120, look for a pullback or maybe a stop loss. If you like to use stop losses, the stock could retrace to $100, which of course would be a little less than a 20% loss, but you could potentially, average your way in here and then catch the next bounce possibly. But we could always come back to it over the next week or so. Big candle here. Look at that downward consolidation channel, double bounce off the 50-day, and then boom, basically almost back to the top Bollinger Band here, 122.89. Stock hit 121.44. So in the immediate short term, again, they might pause it a little bit in the morning maybe because the daily RSI is above 70. But the weekly RSI is sitting here at 63 1/3, indicating that we still have more potential long-term growth coming. So again, after the big pops, stocks like AA and SCCO might be down $1 or $2 tomorrow if they're rallying so much today. But then after that, in my opinion, they're probably going to pop and continue to go up a little bit higher. And also you can see the MACD was dropping hard, made the U-turn, and is now very, very close to approaching that bullish cross again. So that's why with the higher RSI, this might cool down for a day or two, but then chances are they're probably going to pop it higher. And again, I think in my opinion, we see 130 plus. But this is why I love the materials. I love the metals. Oh, excuse me. I feel terrible. And here, LPX stock was in basically like this long-term upward channel. And I even thought here that also you could have made the argument that perhaps this was an ascending triangle. But basically, regardless of what we see in the technicals, the fundamentals, in my opinion, are really what's driving these stocks higher, mixed with, again, monetary policy here in the States, stimulus coming out of China. LPX, Louisiana Pacific, again, this was a lumber company originally brought to you on this channel, I don't remember when, a very long time ago. And of course, I pat myself on the back again for this one, because after I made the video at like $50, $60, and I said, in my opinion, this is a $150 stock, right? This stock should be going higher in the numbers. It's not going anywhere. Lumber company, we need lumber. In my opinion, I'd be a buyer. Then we found out, I think it was maybe about 2 weeks after I made that video, at the beginning of the channel, we got news that Warren Buffett takes a position in Louisiana Pacific, LPX. So this is what I always said to you guys, am I always going to be 100% correct? Absolutely not. It's basically impossible. But at the end of the day, I have showcased on multiple occasions that I have not only seen what billionaires see, but I also saw it and brought it to your attention on this channel before they made the announcement. I said I like LPX in the long term. It's a $150 stock. A couple weeks later, Warren Buffett takes a position. I said that I didn't like Bed Bath & Beyond. There was nothing proprietary. I wouldn't look to invest into the company at all. And then a couple of days later, we find out that they filed bankruptcy. I said that last summer, August, September, October, when we had that 3-month sell-off, I called that the market should correct and pull back. Now, again, I know some people are beating me up lately because I kept talking about we're going too high. But again, this is a reverse market crash, so you really shouldn't be too excited about this. This is technically a bad sign, in my opinion. That's why I was pushing for a further market drop. As much as that might have hurt people, it would have kept it real. So now, in my eyes, we're fake. We're in an unreal market. But at the end of the day, I was calling for index puts. I was telling people, keep an eye on the VIX, right? Play the volatility. When markets go down, consider buying positions in things like silver and gold as hedges. And then, of course, after we were in the Discord, again, shout out to the crew in the Discord. We got a great group. If you guys want to join the Discord, it's free for everybody to join. Just let me know in the comments section. I'll send you a new link that isn't expired because I'm trying to keep the bots out. That's why. But basically, at the end of the day, we were in the Discord just kind of calling out all of these index puts, playing this big sell-off. People were making, 200-300% off of these put options. And then what happened? We were doing that for about a month or so. And then we got news that Dr. Burry, the guy from The Big Short, all of a sudden takes multi-billion-dollar index put positions on, I think it was, the S&P and the NASDAQ. Right? So again, I'm not trying to be too cocky and too conceited, but I mean, we have to call it like it is. When you're seeing the same moves as multi-billionaires and some of the most successful investors and traders out there, but you're seeing those moves weeks or months before they take action, I mean, come on. It really doesn't get much better than that. But LPX here, hitting new highs today, 108.5, even closing 106.87, up $1.62, about 1.5%, riding off of that wave coming out of China with their stimulus. Market cap $7.5 billion. PE after this huge run, the PE is still sub 20. Still sub 20. We're getting paid a dividend yielding about 1%. EPS has been solid, 4 beats in a row. Annual revenue obviously exploded coming out of those lockdowns. 3.938 billion for 2023. We pulled back to about 2.6 billion. But you can see the last several quarters on the up and up. Q1, 724 million. Excuse me, I'm sorry. Q1, 724 million. Getting back up to that big Q3 revenue number they brought in. And now last quarter, Q2, 814 million, breaking into that 800 million mark. Net margin percentage, almost 20%. You can see that's just a nice step up and up here. So if we look at some of these numbers now, we're up to a little over 1.5 billion, which should get us back above that 3 billion mark, right? So we were on the up and up. We went flat, we had a step back, and now we should technically step back up. But even on the annual side here, if we call 3 billion for this year, you can see market cap 7.5 billion. So based on the current year 2024 revenue, this stock right now is only trading, 2.5 times annual revenue. And again, for a material stock that we also know that Warren Buffett took a position in my opinion, I think it is still drastically undervalued, and I have to stand by my analysis, my original analysis back at $50, $60, that this, in my opinion, is a $150 stock, and I think that's being nice. I think that's being very conservative. Look at the dividend here on the up and up, coming out of lockdowns. We're up to almost $1 a share now, steadily growing. Assets outweighing liabilities, both the short and the long term. The debt has, looks like it got up above 400 million, down here to about 370 million. Companies holding basically almost that much in cash on hand right now, 317. That's been on the up and up steadily for the last 5 quarters in a row. And look at the reversal we have now in the free cash flow. Look at how positive it's been for the last 4 quarters. And if we look at last quarter, free cash flow 176 million. This time last year, minus 65 million. So this company really seems to be moving in all the right directions. We have equity here slowly and steadily climbing, 1415. Now we're up to 166 billion. The debt again, 300 million. If we subtract that, we're looking at about 13 billion. Book value per share here, 23.35. Look at that, was 20 just a couple of quarters ago. Now we're up to 23.35. So we're trading about 4 times book value, even after consistently running and hitting new highs. We're only trading 4x book. And again, the fair value, the company was holding about that much cash on hand, so that brings 1.6 down to 1.3, basically back up to 1.6. If we look at, no, we said this year we're looking at 3 billion, so that would be, about 4.6. And if we give them like 20% profit margins, that would bring us to maybe like 4 billion, 4.2 billion maybe, fair value, in my opinion. And the market cap right now, 7.5 billion. So in my opinion, this company is currently trading based on current and future revenue and business for 2024. This company is currently trading, in my opinion, less than 2 times fair value. So that's why some of the other stocks we looked at just now, like AA and SCCO, may potentially be a little overextended and may start to pull back. Something like LPX, in my opinion, is probably going to continue to be on the up and up. And I don't like to get political, but it is an election year. And in my opinion, I know people are trying to tell me that Harris, if she wins, is going to build a bunch of homes to solve homelessness. I don't even know what the policy is. But hypothetically, let's say that's true. She happens to win. And let's say they actually roll that out. Then chances are you're going to start to see even more growth take place in the home builders and, of course, the material suppliers like your LPXs, your Weyerhausers, right, WY that we looked at. So this is why, in my opinion, you always have to keep an eye on these businesses, especially the rate at which real estate values have been climbing over, I'd say, the last like 10 years, 15 years. Real estate has really taken off. So that's why everyone really is looking at stocks like Restoration Hardware. They're looking at the lumber companies, LPX, Weyerhaeuser, and those are the ones that they're buying into on the dips and tucking away for the long term. And also the fact that a lot of you younger traders out there don't care about these companies. Trust me when I tell you, it's not an attack on you, but listen to me. Trust me when I tell you. That's exactly how they like it. They don't want you to know about these companies. Keep looking at your Nvidias and your Teslas and keep trying to time the trades, and sometimes you win, sometimes you lose, but at the end of the day, the people with money, they're seeing the writing on the wall. And whether you agree with current policies or current issues here in the States, at the end of the day, if we're going to have people pouring in, and now people are going to push to build houses and apartment buildings to house these people, well, guess what? You're going to need all the materials across the board to do so. That's why people with money, in my opinion, have been buying into these material stocks. But overall, LPX, I do still like it. And let's just look at stock charts real quick. I'll let you go. This video, again, I just wanted to look at Alcoa, SCCO, and LPX. There's some other stuff going on today as well. We had LAC with a nice pop today, closing up almost 13%, back up above 270. UAA was kind of approaching that $8 level kind of since we originally looked at it. And it's kind of just been bouncing between 7 and 8. But you can see today the stock had over a 5% pop, up about half a point, getting up to the high 8s. So now we may have been early with our original analysis by many, many months. But now that rally that we were kind of showcasing and predicting, potentially filling the gap, I think it was back up to like 12 or 13. In my opinion, that may be back on the table. So I might do a UAA update soon. Fubo up a little bit today. Very nice. SB back above $5 a share. Oil recently has been dropping. Of course, I mentioned in the Discord, in my opinion, I rolled the dice and I bought a call on oil. And now, back-to-back days, oil has 3.5% sell-offs. So obviously that did not work out too well. But this is why we always say this is why trading is significantly more difficult than investing. Investing, in my opinion, is easy. But again, maybe that's just me. I'm not trying to be too cocky, but seeing, the longer term picture and not being kind of just under that pressure of that timeline, right? Oh, it expires in 2 weeks. I really hope it moves. Oh, my option expires this Wednesday. I need a big breakout today, right? We stress ourselves out. We add to the anxiety. And I understand it's fun and the returns are big. And like we say, if you have a couple of extra bucks, you definitely should consider taking a shot and trying to speculate a little bit and gain some nice short-term returns. But the overall bulk of your capital, in my opinion, really should technically be in brand name companies that are steadily growing, they're paying you dividends, or it's something like a material stock that we're going to continue to need. We were dealing with the hyperinflation again, 2020, 21, right? People were talking about how much lumber prices were up and what companies were doing well. Well, the lumber companies like LPX and Weyerhaeuser, right? So that's why I say sometimes take a step back and work smarter, not harder. But LPX, again, just like all the other ones now, RSI sitting here 72.7, but you can see that it was a little overextended even as of late, had a slight sell-off, and now bounced today with the rest of the sector. So the stock may not really abide by these RSI rules and may continue the up and up, and we can see top Bollinger Band 109.23 technically would be a new 52-week high, but you can also see mid Bollinger Band and now 50-day moving out. Look at that, beautiful. Was off the screen at about 60. Now it's almost 100. And you can see the mid Bollinger Band and the 50-day now in the high 90s. So in my opinion, maybe you can have like a 10-point sell-off here if the RSI gets overextended, and then it'll probably bounce and keep running back up. You can see we've had some healthy bounces recently off of that 50-day moving average. MACD has been on the up and up, could be potentially signaling that it's time to cool off and drop down. And unlike the other stocks we looked at, LPX here on the weekly time frame, 69.5 RSI. So now we're potentially overextended in the short-term time frame and in the longer-term time frame. And it has been a tight upward channel. You can see, look at all those healthy bounces off of this mid Bollinger Band. And again, the ball dropped here. And this has been LPX this year. So again, do a lot of people search for LPX? Do a lot of people care about materials or look at lumber stocks? No. And in my eyes, that's the way they like it. And more importantly, that's why I brought these stocks to your attention. The LPXs, the SCCOs. And again, did it take a while? Is it boring? Are the kids talking about it on Reddit? No. Are you up 100%, 200, 250% with dividends? Yes. So, usually what happens is during a situation like this, people will always be struggling with their flat accounts or their red accounts, and then they'll look at a stock like this and they'll say, oh, I knew it. We were printing money like crazy. The price of everything is going up. I should have just bought this lumber stock. I should have just bought this, this gold. Or, you know what I mean? We do that hindsight Monday morning quarterback trade. And that's why I say, in my opinion, it's not worth it. Take a step back. Play the longer term game, because it does seem to pay off very well for you if you have the capital to do so. If you're a small-term trader with a $300 account, I can appreciate the fact if, you really can't take advantage of a lot of these situations. But when people out there message me and they're like, oh yeah, I got like 75 grand in my account and I own like this crackhead penny stock and I bought a bunch of options. It's like, brother, well, what are you doing? What are you doing? Because in reality, 50, 60 thousand of that 75 should be secured. It should be working for you. It shouldn't be exposed to much risk, right? Work smarter, not harder. But MACD has been on the up and up. Looked like it was about to cross to the downside there, signaling some bearish momentum, but had a nice bounce here to the upside off this recent news. But the RSI has been topping out, but we have been making up and ups, and we are in this tight channel. In my opinion, it may continue actually to climb, even going into and after elections. Obviously, if Trump wins, I'm sure he's going to talk about bringing prices down. He's going to do everything he can to lower the rate of inflation. And so when everything like that starts to come down, that's when something like an LPX will potentially start cooling. And you might see a pullback all of a sudden into the 80s, into the 70s. So keep that in mind as well. But LPX, phenomenal winner there. And of course, the Oracle, Warren Buffett, agrees with me. But that's pretty much it. I just wanted to do an update on those three metal and material stocks, and I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they are volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and have a good day.